Ladies and gentlemen, archivist here. Stop looking at the stock market. Stop looking at the Dow Jones Industrial Average. That is a hallucination. It is a digital scoreboard for a game that ended 3 days ago. If you are still watching the green and red candles on your screen, you are looking at a ghost. The real event has already happened. It happened in a quiet government building in Washington, D.C. It happened in the dark vaults of New York. And it happened while you were distracted by the political theater of the Greenland crisis. The United States government just admitted that the dollar is broken. They did not say it in a press conference. They did not announce it on the nightly news. They announced it through a pricing update that most of the world missed. But the archivist did not miss it. The financial intelligence insider system captured it. And the implications are terminal. On January 17th, 2026, the United States Mint resumed sales of the Silver Eagle. This is the standard. This is the baseline for physical money in the Western world. For 3 days prior, they had suspended sales. They went dark. They claimed it was due to extreme price volatility. That is a lie. You do not close a store because the price is moving. You close a store because you have no inventory. When they reopened the doors, the price was no longer $91. It was $169. Do the math. That is an 86% increase overnight. The spot price of silver on the paper markets, the fake price that you see on television, is hovering between $90 and $94. But the United States government will not sell it to you for that. They will only sell it to you for $169. This is a spread of $79. This is not a premium. This is not a surcharge. This is a default. This is the moment the paper price and the physical price divorced. The paper market is trading a fiction. The physical market is trading reality. And the United States Mint just confirmed that reality costs 80% more than the bankers told you. We are entering the phase of unobtainium. The system is breaking. The spread is the smoking gun. And today, we are going to dissect the corpse of the paper silver market. We are going to look at the Friday night heist. We are going to look at the Chinese stranglehold, and we are going to look at why your pension fund is about to be vaporized by a shortage of the one metal that makes modern life possible. The insurance adjusters have left the building. Here is the forensic data. You have been told that silver is a commodity. That is false. Silver is a strategic military asset. It is the blood of the digital age. Without it, you have no Tomahawk missiles. You have no solar panels. You have no electric vehicles. And right now, the West is running on empty. Let us look at the spread. We are seeing a divergence that defies all economic logic. The paper price on the Comex is sitting at $94. The street price, the price you must pay to actually hold the metal in your hand, is $170. A spread of nearly $80 represents a premium of roughly 90%. In a functioning market, arbitrage would close this gap. Traders would buy the paper, take delivery, and sell it on the street for a risk-free profit. But that is not happening. Why? Because you cannot take delivery. The paper contract is a lie. It is a claim check for a car that has already been stolen. My system flagged a massive anomaly in the vault data. We call it the Friday night heist. On a single day, 4.2 million ounces of silver were physically removed from the Comex vaults. This was not a standard withdrawal. This was a raid. The metal was pulled from the vaults of JP Morgan. It was pulled from Asahi. It was pulled from CNT, 4.2 million ounces, gone. In 24 hours, who took it? The data points east. While Western investors are playing with Bitcoin and Nvidia, the central banks of the East are draining the physical reservoirs of the West. This is a bank run, but they are not queuing up for cash. They are queuing up for hard assets. This massive withdrawal coincides with a critical piece of intelligence regarding China. Beijing has effectively classified silver as a national security asset. They have imposed export restrictions. Why? Because they know what is coming. They know that the artificial intelligence infrastructure, the massive data centers, the chips, the hardware requires silver. They are hoarding it for their own industrial beast. They are starving the West to feed their own gigafactories, and the United States Mint knows it. The suspension of sales on January 14th was the canary in the coal mine. They cited rising production costs. That is bureaucratic code for we cannot find the metal. When the sovereign mint of the world's reserve currency cannot source the metal to print its own coins, the currency is dead. It is just a walking ghost. This is a sovereign leak. The official exchange rate has lost its relevance. It is exactly like the final days of the Soviet Union. The official rate for the ruble was one thing. The street rate was another. If you tried to buy bread with the official rate, you starved. We are now in that phase for industrial metals. You need to understand the mechanics of this collapse. It is not an accident. It is a structural failure of the debt-based pricing model. For 50 years, the price of silver has been determined by the futures market, by men in suits trading paper contracts in London and New York. They could print infinite paper silver to suppress the price. They could sell 100 ounces on paper for every 1 ounce in the vault. This kept the price low. This allowed companies like Tesla and Apple and Samsung to build their empires on cheap resources. That era is over. The market has shifted into a state called backwardation. This is a technical term, but it means something very simple and very terrifying. The price of metal today is higher than the price of metal tomorrow. This should not happen in a healthy market. In a healthy market, the future price is higher because you have to pay for storage and insurance. When the spot price is higher than the futures price, it means the market is screaming for immediate delivery. It means nobody trusts that the metal will be there next month. It means the warehouses are empty. This is being driven by the convergence of three massive forces. One, the industrial demand, the push for the green energy transition is colliding with geology. Solar panels require silver. Electric vehicles require silver. The new generation of AI processors requires silver. You cannot print silver. You have to dig it out of the ground, and the ground is not yielding enough. Two, the geopolitical fracture. The Greenland crisis is not just about an island. It is about the United States trying to secure resources because it knows the global supply chain is shattering. The tariffs on Europe are an act of desperation. The strikes in Chile at the Mantoverde and Escondida copper mines are cutting off the companion metal to silver. Silver is often a byproduct of copper mining. When the copper mines stop, the silver supply tightens even further. Three, the monetary revolt. The BRICS nations are moving toward an interoperable digital currency system to bypass SWIFT. They are accumulating gold and silver to back this new system. They are dumping U.S. treasuries to buy metal. This is the great rotation from credit to capital. The bag holders in this scenario are the entities that rely on the paper price. Who are they? They are the Western industrial giants. Look at the German solar manufacturers. Look at the American electric vehicle supply chain. They have built their business models on silver at $25 or $30 an ounce. Now, the real price is $170. Their margins are gone. Their solvency is gone. And the biggest bag holder of all is the retail investor holding unallocated pooled accounts. If you own an ETF that claims to hold silver, you do not own silver. You own a claim on a counterparty that is currently being drained of its assets by the Chinese government and JP Morgan. When the force majeure is declared, you will be paid out in depreciating dollars at the fake spot price, not in metal. You will be liquidated. This financial violence is bleeding into the real world. The stress in the system is manifesting as kinetic friction. Look at the supply chain. It is under attack. We have reports of a suspicious collision in the North Sea involving the U.S. tanker Stena Immaculate and a Russian vessel. We have the sabotage of the Berlin power grid by the Vulkangruppe, leaving 45,000 people freezing. These are not isolated incidents. They are symptoms of a crumbling infrastructure that cannot be maintained because the cost of materials is skyrocketing. When the price of copper hits $13,000 a ton because of the strikes in Chile, you cannot afford to repair the grid. When the price of silver hits $170, you cannot afford to build the guidance chips for your defense systems. The United States is entering a period of resource poverty. The U.S. Mint's price hike is an admission of inflation that the Bureau of Labor Statistics will never report. They tell you inflation is 3%. The Mint tells you inflation is 86%. Who do you believe? The bureaucrat with a spreadsheet or the cashier demanding $169 for a 1-ounce coin? The spread between paper and physical is the starvation spread. It represents the gap between the illusion of wealth and the reality of poverty. If you are on the paper side of that spread, you are starving. You just don't know it yet because your bank account still shows a high number. But that number buys half of what it did last week. The short squeeze on silver is not a meme stock rally. It is a geopolitical weapon. By draining the vaults, the East is removing the collateral that supports the Western financial system. They are pulling the rug out from under the dollar. And the U.S. Mint just confirmed that the rug is already moving. This is the resource denial protocol. The time for speculation is over. The time for accumulation is ending. We are now in the phase of preservation. The window to convert fiat currency into hard assets is closing. When the spread reaches $100, the paper market will likely close. The exchanges will declare liquidation only. You will not be able to buy. You will only be allowed to sell back to them at their fake price. Do not get trapped in the paper slaughterhouse. Rule number 1, liquidate the paper. If you hold SLV, if you hold unallocated silver in a bank vault, if you hold a futures contract, sell it. You are holding a burning match. Get out of the paper market immediately. The counterparty risk is fatal. The banks explicitly state in their prospectuses that they can settle in cash during a market disruption event. This is a market disruption event. Rule number 2, secure the physical. You need metal in your possession. If you cannot hold it, you do not own it. The U.S. Mint has set the floor at $169. That is your new baseline. Do not flinch at the premiums. The premium is the price of safety. Focus on recognized sovereign coinage. American Eagles, Canadian Maples, or constitutional silver pre-1965 U.S. coinage. I am not telling you to melt these coins. That is illegal. I am telling you to view them as the ultimate fractional barter unit for a failed economy. They are recognizable, they are divisible, and they are disappearing from the market. Rule number 3, target the producers. If you must have exposure to the stock market, own the ground. Own the companies that have the reserves in safe jurisdictions. Do not buy miners in countries that are nationalizing their resources. Look at North American operations. Look at Pan American Silver PAAS. Look at Hecla Mining HL. These companies have metal in the ground in jurisdictions that are less likely to be seized by a hostile foreign power. But understand this, in a total collapse, even stock certificates are just paper. Physical metal is the primary shield. Mining stocks are a speculative lever. Rule number 4, assume zero delivery. If you run a business that relies on silver paste or copper wire or specialized electronics, assume your supply chain is broken. Triple your inventory. The just-in-time delivery model is dead. It has been replaced by just-in-case. If you do not have it on your shelf, you will not get it. The strikes in Chile and the export bans in China ensure that global supply is being rerouted to domestic priorities. You are not a priority. The insurance adjusters have left the building. The U.S. Mint has hung up the out-of-stock sign. The protocol is active. Now, I want you to conduct a personal audit. Do not look at your 401k. Look at your physical reality. Go to your safe. Go to your pantry. I want you to count your ounces. How many ounces of physical silver do you actually possess? Not paper claims, not mining stocks. Metal. If the power grid in Berlin goes down, your Bitcoin wallet is inaccessible. If the banks declare a holiday, your credit card is a piece of plastic. What do you have that is universally recognized as value? Tell me in the comments below, what is your ratio of lead to silver? What is the one item in your inventory that you know you cannot replace if the supply trucks stop rolling tomorrow? Is it antibiotics? Is it ammunition? Or is it the silver you refused to buy when it was $30 because you thought the premium was too high? If you do not have an answer, you are already a casualty. You just haven't stopped moving yet. This is the archivist. The protocol is active